Well, it's an adaptive company. It believes in changing with the times, and I guess that's the key mantra for any survival of the fittest, and that's who the fittest are. And I think the market is really rewarding that as well. We would skip what Reliance did yesterday because remember, the stock has run up as well pretty hard after the FB deal itself got announced. So maybe a muted reaction to the rights issue or for that matter, the earnings. Just staring at the screen right now, it's really going to be about what leads the recovery and how much of a recovery do we really see. If indeed we move up about 1.5% or so, does that opening tick get sold into, or are we able to sustain or for that matter even build on to the gains that we start off the day with? On my screens, it seems that it's going to be a comfortable start. The market pre-open rates are indicating about 1.5% in the green, much in line with the rest of Asia, or for that matter the US market handover, which by the way, after having started off 300 points lower, you staged a massive comeback. So good amount of recovery coming in, finally closing in flat and edging into the green for the US markets. And that's pretty much the case with Asia as well. While most markets are shut there today as well, but you are seeing those green ticks kick in. Shanghai holding up, Hong Kong holding up, Australia as well up in the green. So we're starting off in a comfortable, a set of global cues. Yes, the big factor, like Nikunj as well has been highlighting, has been that in yesterday's session, both FIIs as well as DIIs were net sellers. So what really happens to that trend? Because remember, net up until April, FIIs actually have been buyers. So do we see some sort of a trend change coming in here? What sort of activity do you really see from the DIIs? That's eventually going to comfort the markets from here onwards. But counting down to the open, you've got a couple of earnings as well coming in. Not a whole lot by way of weightage or repercussions for the index per se, but that's something that you may want to look out for as such as well in trade. We're going to look out for whether or not there is a follow-through rally coming in pharma. What with the move coming in at BHEL yesterday, Bharti was a standout performer. And then some of the autos and auto ancillaries which continue to be really beaten down, as was the case yesterday. You saw what happened with the Bharat Forge, you saw what happened with the Motherson Sumi, or for that matter the other laggards, especially metals. Now that you're seeing again this sort of strife build up between US and China, metals are the ones getting clobbered. The first rates then on your screens after closing in at the level of 92.85 in trade yesterday. This morning, hoping for some recovery back above the 9400 level. That is what the first rates are indicating right now. So the SGX Nifty 93.92 and the Nifty pulls it up to 94.29. The breath as well has started off in the positive. I can see Hindalco, ONGC, ICICI Bank, Zee, Axis, Bajaj Finserv, Tata Motors, UPL, these are all stocks which have started off in the green. I just want to quickly check in on the big losers from yesterday. What were the likes of L&T Finance, Bharat Forge, SAIL, Motherson Sumi, LIC Housing Finance, what these names are up to and whether you're seeing any recovery in the most beaten down end of the market from yesterday or not. Even a Bajaj Finance, for instance, fell very hard yesterday, was back down by about 10%. You saw some red ticks come in for ITC as well, which was lower by about 4.25%. Asian Paints as well fell pretty hard yesterday. So I don't think the market spared anything in that sense yesterday. Though a good day, as I've been repeating, for pharmaceuticals, for a Bharti, for a BHEL and United Spirits. That held out very smartly by about 1.5% in trade yesterday, along with UBL, which was holding up 3.5%. So let's see whether those rates get replicated or not in today's trading session.